All right, Ripple XRP holders. Hope you guys are having an amazing Sunday. So, a global wartime inflation shock, creating a $25 trillion predicted Fed flip to trigger a 1 million Bitcoin, Ethereum, XRP, and crypto price boom. Now, that's a lot of words in one sentence. We're going to unpackage what that means in this video. We're talking about XRP sitting at 55 cents, what's about to happen next to the markets. We're getting to the XRP. To the US dollar price chart, Bitcoin to the US dollar price chart. We're also talking about what's taking place right now in the macro market economy, bonds, the 10-year to 2-year treasury constant maturity with this inverted yield curve now flipping. I've been talking about this in multiple videos, and this is affecting the stock market. We're comparing the S&P 500. We're looking at a deviation that took place back in 2007, 2008, and what we're seeing happen right now on the chart on how far we're going to go down in the stock market until we see a reversal take place in the S&P bounce, the decoupling from the crypto market, some XRP news inside the SEC versus Ripple battle as the November deadline comes closer, with the SEC wanting $770 million, man. What are we talking about here? They still want some money after Ripple spent over $200 million to fight these clowns. Now they want more money from them. This is an absolute joke. So the SEC is pissed and embarrassed. Of course they are, because they're on the wrong side of the law here. And Ripple exec and XRP community firing back, SEC commissioner, library lawsuit, dissent. What does all this mean? What's happening right now? And also, migration of SEPA payment schemes to 2019 version of ISO 20022 postponed until Sunday, 17th of March of 2024. So all that in this video and more. Comment 777 if you're feeling blessed, if you're feeling bullish, and if you're going to become the first millionaire in your family tree, you know what to do. Confirm it by tapping that like button, tapping that subscribe button, because we're going to beat the SEC. Just tap it in, give it a tippity taparoo, and we're going to buy grandma's house back with XRP. Let's run it. All right, bull runners, welcome back to the channel. So looking at the XRP to the US dollar price chart, with XRP currently sitting at 55 cents, this is a massive zone of resistance that XRP has struggled to break out from since September of 2022, roughly between 55 and 58 cents. It also acted as support all the way back on June of 2021, July of 2021. We see it on January of 2022. And so this is like the Berlin Wall right here. Once XRP breaks this and holds it as support, if XRP can break it and hold it as support, then we'd most likely be going higher. Now, if XRP cannot hold 55 cents as a support, like I said in previous videos, we would just most likely grind all the way down to about 44, 45 cents, which is this upward trending support line right here. And it also is where XRP wicked back on the 17th of August, post lawsuit, when we saw it go upwards of almost $1, come all the way back down. So where XRP is going to go next is obviously going to depend on this ISO news, CBDCs, the Federal Reserve, monetary print orders, what happens with the macro market economy, the stock market, and then also Bitcoin, as Bitcoin decouples from the stock market. We're looking at Bitcoin right now. If you guys watched one of my previous videos, I talked about Bitcoin in comparison to the last bull run when we saw Bitcoin break out of the March low from this black swan event right here. We saw Bitcoin consolidate within this range, symmetrical triangle. Bitcoin breaks out, forms a new range, $12,000, back tests the resistance of the previous range right here, breaks out again, and then Bitcoin just kind of grinded all the way up. We didn't really see too big of a correction until January of 2021, when Bitcoin went from $41,000 to $29,000. So if we see something similar, Bitcoin's chart would look something like this. Now, that would have to come at some good news with what the Federal Reserve would do, adding to their balance sheet, I personally feel. But either way, Bitcoin moves on the 4-year market cycle of Bitcoin's halving. And so if Bitcoin just constantly treads higher, and we see Bitcoin just kind of grind it out over the next week or two, compared to my video yesterday, we don't see Bitcoin, crash all the way back down to $30,000. We could see a retest of this zone right here as support, similar to what we saw back here when Bitcoin went from $12,000 all the way down to $9,800, then broke out of there. That could be the last, back test, as Bitcoin does something like this, and then we see it work out of here, out of this range. That could happen, but we need to hold $30,000 to remain bullish. If we break below $30,000 and we start coming down 26 or 25K, then we might need to reevaluate what Bitcoin is going to be doing over the rest of this year leading into 2024 for, something like this to take place, where we're in just a more macro accumulation phase right now. So we want to see Bitcoin just stay in this range right here, push higher, and then see a break upwards of $40,000. That's what we want to see for Bitcoin in order for XRP to break 55 cents and see XRP going upwards of, 70 cents to $1, which is where it was post lawsuit, right? Because the good news happened for Ripple and XRP couldn't hold the dollar. Why was that? Well, it's because of macro market constraints. And America's military budget is set to truly explode. So Hayes, who co-founded crypto derivatives pioneer BitMEX, wrote in a wide-ranging blog post that pointed to the potential for escalation in war between Israel and Hamas in Gaza. So Black Swan event, could it be coming? And could it affect the crypto market? This will increase future government borrowing, and the sky's the limit when it comes to the sums of capital a war can waste. He wrote that if long-term U.S. Treasury bonds offer no safety for investors, then their money will seek out alternatives. Now, where will the alternative be? It would be in gold, it'd be in silver, and most importantly, Bitcoin will begin rising on true fears of global wartime inflation. And Larry Fink from BlackRock said it himself. He says, crypto will facilitate and be that flight to safety. The CEO of the largest, one of the largest companies in the world that manages over $10 trillion is saying this. So we should be paying attention. In this scenario, the Bitcoin price could climb to $1 million, he predicted in an ex-Twitter post. In a bullish scenario, the $25 trillion US government bond market has suffered from extreme volatility in recent weeks, sparking panic on Wall Street as yields, which move inversely to bond prices, on the 10-year U.S. Treasury note topped 5% for the first time in 16 years. The U.S. Federal Reserve and other central banks around the world have been grappling with soaring inflation in the wake of unprecedented COVID-era money printing and supply shocks. The Fed has hiked rates at a historical clip in order to bring runaway inflation under control, but causing Bitcoin, crypto, and stock market chaos over the last 2 years. And as you can see right here on the U.S. government bond, the 10-year yield, we're at 4.8%. Now, one thing that's very interesting to note is we see this bullish channel right here on the RSI taking place. We're at 68 on the RSI. We topped out actually on October 3rd, earlier this month, at about 79 on the RSI, and we're currently coming down. So while we formed a higher high on the actual price chart, or not the price chart, the percentage chart, because prices, as yields move, price move down. So as the yield, in terms of the percentage that you earn on your money in the 10-year bond, moved up, well, the RSI was now making a lower high. So at some point, what I feel is going to happen here is the 10-year yield percentage is going to break this upward trending support that it's had since March of 2023, because we've been bullish August, September, October for like 8 months. So for this whole year, once it breaks this and we see another push up to back test this upward trending support as resistance, then the RSI would most likely come down, as we see the yield percentage correct down. So as bond prices go up, the yield comes down. Then what does that mean? Well, we're now starting to see a 10-year treasury minus the 2-year treasury invert, meaning that 2 years are starting to come up, whereas the 10-year, is going to be underperforming. Well, the 2-year has been overperforming the 10-year. Eventually, this means that the 10-year would be overperforming the 2-year. And this is a signal of a recession coming. So we bottomed out right here in July of this year at negative 1.08%. We're currently at negative 0.15%. So we're getting closer to zero. And if we go to the max on the chart and we look back to 2006 to 2000, right here to 2007, so we went inverted 2006, then we went into the positive June 6th of 2007. So for about a year. And then a recession ensued after that. And so right here, let's see where we were. June 4th, 2007, we were at negative 0.04, and then we just drastically broke out of there. So June 4th, 2007, let's go to the chart right here, and let's look at June 4th, 2007. We were forming a higher high on the stock market. So the S&P 500 was at 1,537, and we saw a little correction take place. Then we saw one final bounce for the all-time high of 2007, and then the market crashed after that when we started going inverted. Now, interestingly enough, if we look at the stock market right now on the left-hand side of the screen, when I refresh this page right here and we zoom in to, where we are, well, we went inverted on July 5th of 2022, and we're almost at zero, getting ready to break into the positive territory. So if we see this, chart right here go into the positive, will we see the stock market do what happened back in 2008? And this is the dead cat bounce right here, similar to the all-time high that now we're going down from. So either, if that's the case, where we are right now, well, we would either be like right around, let me circle it right here. We'd either be right around this point right here, waiting for this bounce to take place, or we would be somewhere around this phase right here, or this phase right here on the other side, ready to go down. And so we're almost at a 50% retracement from the high of 26th of July of 2023. And also simultaneously, we look at the RSI, we're at 31 on the RSI. So what I would expect to happen for the S&P 500 is we could push a little bit lower to 0.5 or 0.618. If we go all the way down to 618, that's like 3,900 for the S&P. And then I would expect there to be a bounce to take place. And then if we trend lower, something like that, if it's similar to 2008, right? So we could see something like this take place, and then absolute chaos ensues. Because there's a crash coming, man. I mean, whether it's happening this year, 2024, by 2026, how long can the Fed hold it off before this happens? What everyone was expecting to take place was back in March of 2023 for the stock market to see it roll around at this phase, when in reality it was just crashing to the upside, right? We crashed to the upside. We were forming higher highs on the RSI and higher highs on the price chart as well too, and then we were forming higher lows as well. But we saw this wedge taking place and drastic break to the downside. So now that we are low on the RSI, we're going to see a bounce take place at some point, and then we could drop back down again. And so right here on the right hand side, what were we seeing back in from 2006 to 2007 before the market crash? We were seeing higher highs on the price chart, and we are seeing lower highs take place on the RSI. I mean, right here from October of 2006 all the way until December of 2009, for 3 years, this was a very strong point of resistance acting as lower highs on the RSI. So when we finally got, would have been very easy at this time if you were in the stock market to understand when the bottom was going to be in for this crash. Because the good news about this is when a crash takes place in the markets, it doesn't last forever. Just like a bull market doesn't last forever. So if you can understand how to look at an RSI and look at the price chart and look at deviations as well too, and we see this like bearish deviation where there's lower highs on the RSI, there's higher highs on the price chart, we can see when reversals would potentially take place. So as we see right here, when we finally broke this descending resistance in March of 2009, and we broke out from this, this was a sign that the bottom of the market was in, because you notice on the RSI, we broke out. On the price chart, we broke out massively as well too, from 660 something all the way upwards of 950. And then this back test on the price chart on the RSI was a back test of this descending resistance acting as support. Then a bounce off of that on the RSI. Now we are above 50, because for a while, it took a while to get above 50. Then now we see that we're above 50 here for an extended period of time on the RSI and spending minimal time below 50, other than for this little correction right here. So what's most likely the scenario to take place for the RSI? Well, the RSI to see a bounce, upwards of 50, and then to come back down, and for us to spend a good chunk of the time the next few years potentially below 50, unless the Fed can step in and do something to help out with this. The most likely case scenario is a crash to the downside. Even if we see a bounce, sure, let's say you don't buy anything, don't sell anything, obviously, but let's say you bought in the stock market right now, we'd more than likely see a bounce, and you might be able to catch a little correction like you were seeing back here in 2008. If I were to measure out what these little correction percentages were, this one right here was a 7% correction. This one right here was 9% before continuing to the downside. This one right here was 14%. This one right here was about 8%. So more than likely we would see something similar take place. So if we bounce from here, or if we go all the way down to 0.5, if we saw a 4% or like a 5%, bring us up to 4,300, if we go to 8% correction, it'd bring us up to like 4,470 something. So trading the stock market is very, very risky right now. It's very, very tricky, but a bounce and then continuation to the downside is what I would expect. And that simultaneously would be because we see the 10-year to 2-year going into the positive territory, just like we saw happen in 2007 to 2009. We went from negative upwards of 2.82, and that's when the bottom was in when we were at the peak. Go back here to the 2000 crash as well too, right here, right? We went from 0.01 or negative 0.05 into the positive on December 29th of 2000. So let's go back to December 29th of 2000. Where were we? Of 2000, October, November, December. We had already seen the top of the market come in, and we were on the way down. So we were right here on the way down. So now that we are going into the positive, where are we on the stock market? Well, honestly, this is going to be what I expect on the way down. We're on the way down. So where will the bottom be? Well, it could be 1 year to 3 years before we see that. So getting the stock market right now, honestly, it'd be a good move to short the stock market. I mean, Michael Berry, the guy who predicted the big short for the 2008 crash, he predicted this. He started shorting the market, and the market rallied. And then I think I don't know when he actually started shorting it. He might have started shorting it like right here or something like that. Like actually we go over here. He might have started shorting the market like right here in March of 2007 or something. Correct me in the comments, guys. Can't remember the exact day. But when he started shorting the market went up. But he made a lot of money because he was patient, and eventually the market went down. So when he started shorting the market went up a little bit. Now the patience is going to pay for someone like him and those that are shorting the stock market. So are you shorting the stock market? Are you not in the stock market? What are you guys dealing with right now? When we look at XRP, how does this affect XRP? With the stock market crashing, I mean, normally, because the crypto market has been correlated to the stock market, that's not good news for the crypto market. But right now, what's interesting is Bitcoin has been decoupling from this crash. Bitcoin is rallying while the stock market is crashing. So could this be one of the biggest times in history that we see a stock market collapse and a precious metal and cryptocurrency bull run bigger than anything than ever before, leading to 2025 as money flows out of these old school stock market companies that are 50, 100 years old and starts flowing into these new blockchain tech companies as the new wave of, and not the industrial revolution, but the technology revolution. I think maybe that's what we could see. However, when we look at projects like the XRP and Ripple fighting the SEC, they want $770 million. So the last step for Ripple to move forward from this lawsuit is to write the SEC a check and decide how much they're going to pay them. And that's back and forth. Stuart Alroy, the chief legal officer at Ripple Labs, as well as members of the XRP community, have expressed their support on Twitter's X for the SEC commissioner Hester Pierce's stance against perceived injustice in the library lawsuit. For those of you guys that have been paying attention to the channel, you saw what happened there. Alroy thinks that Pearson suggested that what's going on with ongoing injustice occurs in non-fraud cases, especially with consumers when they are still awaiting resolution for fraud cases. It might be necessary to disregard standard protocols and raise concerns more vocal and promptly, potentially even by submitting an amicus brief to address the issue. The SEC commissioner issued a dissenting statement regarding the library lawsuit. On October 27th, just a couple days ago, Pierce emphasized that the commission has recently initiated numerous enforcement actions against cryptocurrency exchanges. You got Ripple, Library, Kraken, Binance, Coinbase, and Pierce noted that the library lawsuit was particularly disconcerting to her, but stated she couldn't discuss it due to ongoing litigation. And so very similarly, Library was not declared a security on the secondary market, similar to XRP. And in July, Library was determined to have violated Section 5 of Securities Act. Consequently, Library has permanently barred from engaging directly or indirectly in unregistered cryptocurrency securities offerings involving its native token. And so John Deaton, in response to the commissioner's statement, suggested it might be time to submit an amicus brief, believing that just as 75,000 individual holders expressed their views in court, it's also important for someone with insider knowledge to speak out in a court of law. And he'd expressed his disapproval of the SEC's actions against the company, which he believed caused financial distress. So what are your guys' thoughts on that? Ultimately, this back and forth talk and these lawsuits and all that stuff, we're just going to see the price move based on what's happening on the macro market conditions. And, with Ripple, with XRP following Bitcoin right now, XRP is not going to see the massive price appreciation that it needs unless we see Bitcoin breaking 40K, 50K, then eventually the all-time high. And also, talking about the migration of what's happening here, since the end of March this year, the European Payments Council has closely monitored the SEPA payment scheme participants to migrate the 4 SEPA payment schemes, which is the SEPA credit transfer, SEPA instant credit transfer, SEPA direct deposit core, and SDD business to business to the 2019 version of the ISO 20022 based XML messaging standard, originally envisioned for 19th of November. So everyone was posting everywhere, get ready. The 19th of November is when the switch is going to be flipped. And since September of 2023, has also been assessing the operational migration status with all self-declared SEPA payment scheme compliant clearing and settlement mechanisms contracted by scheme participants to offer SEPA payment scheme based services. And so based on the input collection, and I'll explain what this means from SEPA payment scheme participants, in the second half of October of this year, the Payment Scheme Management Board of the EPF unfortunately concluded that a successful ISO version migration on 19th of November could not be guaranteed for at least 2 large SEPA countries. This is due to reported operational delays and a need for additional testing time to ensure a safe migration. Based on this input, and upon consulting all relevant stakeholders, the EPCs, PSMB carefully addressed all possible contingency scenarios, and following a thorough evaluation, decided to postpone the ISO version migration to Sunday, 17th of March of 2024. So when we go back to the price chart right here, March of 2024, how far away is that? So we go March of 2024. Let's just put it to the end of March. Let's say they push it to the end of March and then April right here. So where are we right now? Well, it's October 29th, almost Halloween. What are you guys going out tonight dressed as? Are you going to go dressed as Brad Garlinghouse or Gary Gensler to your Halloween party tonight? We're looking at about 155 days away. So 36. Yes, I still count on my fingers sometimes, okay? You don't got to be smart to make money, but 30, 60, 90, 120, 150, 5 months away. 5 months away before they potentially flip the switch. And interestingly enough, could we see XRP just kind of grind it out sideways right here in this formation, hold this support, struggle to break above 55 cents, and then snap beyond this? And then we start to see XRP pull these insane rallies leading with Bitcoin. Because when is Bitcoin's halving? Well, it's in April. So Bitcoin's halving is around the same time that this new messaging standard takes place. This is some weird matrix level timing, right? So once this ISO 20022 standard kicks in March of 2024, the next month, so March 17th, within less than 2 weeks, right? All the talks, all the news companies, BlackRock is going to be pushing articles all over the world. Bitcoin's halving's coming up. BlackRock will allow you guys to have ETF approval. The ETFs, January, leading into March, start getting these blanket approvals for all these ETFs. And Bitcoin halves, ETFs get approved, ISO standard goes live. What do you think is going to happen to the crypto market? I mean, it doesn't take any rocket scientists here. It's going to go insane. So does it make sense to have all of your money? I'm asking this right here because I'm really curious, because I am okay with being completely wrong here, but I have yet to see somebody explain to me why it makes sense to be in the stock market right now. I don't think it makes any sense to be in the stock market right now. I feel like this is going to be a disaster. And so people that are saying it's a bad idea to be in the crypto market right now, I feel like it's better than the stock market. I feel like it's better than cash because of inflation. And also, I don't feel it's the best to be only in Bitcoin. If you are, I asked somebody when we were out and about the other night, and I was like in line at the bathroom and asked this guy, I was like, hey, you hold any crypto? He's like, yeah, the only one that matters. I'm like, which one is that? And he's like, Bitcoin. I'm like, okay, I do think Bitcoin's going to perform well, but what do you guys think Bitcoin's going to do? I mean, if Bitcoin goes to $300,000, that's a 10x for Bitcoin for $300,000. What do you think is going to happen to the altcoin market? Well, I believe something like Chainlink will perform better, because you see Bitcoin do well, the top 100 altcoins do even better. I mean, one project I'm looking at right now is near to the US dollar. It's in $1.20. Look how far away this project is from its all-time high. Its all-time high was upwards of, like 17 or 18 bucks. It's a 14x away from its all-time high. Its all-time high was $20 for near. And we see it just breaking out of this descending resistance right here, in this falling wedge formation. And usually in a falling wedge formation, the target is the high of the wedge. And so let's just say the wedge is right here, right? If we're not even going to the all-time high, well, that would be at about $5.60 from $1.20. I mean, that right there, in terms of market cap for this project, takes less money to move into a project like this. So don't buy this project. Don't sell this project. Just watch this for learning purposes only. But that's a 392%, almost a 400%. So it'd be like a 4x just to get back to the price of $6, let alone the all-time high for a project like this. And if we go here and we go on CoinMarketCap and we look at a lot of these projects, guys, the market cap on some of these are underneath, not only $10 billion, but $1 billion, sitting in the hundreds of millions. And so when we see, this is what happened, because I was around during the 2016 to 2017, leading to the beginning of 2018 bull run. I was through that crash. I was around through the 2021 bull run. And like a lot of you guys, I've been through the past couple bull runs. And so what happens during these bull runs is Bitcoin moves first. It always moves first. Then once Bitcoin kind of takes a chill pill, calms down for a little bit, then Ethereum, and then the altcoins. And because we're seeing, the dominance in terms of tether to the altcoin market start to drop, meaning people are selling off their stable coins and they're starting to put it into altcoins. That's why we're seeing, Shiba Inu rally 12%, Avalanche up 13% the past week, Cosmos Atom up 8%, Ethereum Classic up 5%, Filecoin up 11%, CRO, Crypto.com up 11%, Quant up 11%, Near Protocol up 21%. So at $1.2 billion. So when Bitcoin sees an injection of, let's just say, Bitcoin goes from $600 million or $600 billion to over $1 trillion, well, 1.2 trillion is what it would take for Bitcoin to see a 2x, 1.2 trillion. How much would it take for something like Near Protocol at 1.2 billion to see a 2x? It would take another 1.2 billion. So that would put it at 2.4 billion. 2.4 billion compared to 674 billion. Can you guys see, and I know you can see this right now, why altcoins are about to absolutely crush it over the next few years? And so what I'm doing right now is I'm putting together a video of the top 10 cryptos that large investors are buying now below $1 price. If you guys want to see that video, make sure you subscribe to the channel. That video is coming out next. I know you're going to love it. And if you go to bullrunners.com and you want to see a list of the top 100 projects that I'm the most bullish on for this bull run cycle that I personally hold, again, it doesn't mean you should hold them. It's not financial advice. Don't buy, don't sell anything. But if you want to see that list first, then you get on the early bird list at bullrunners.com to get it when it comes out. Because we're backing up our truck all the way to the bank, grabbing the bags, packing them, stacking them, leaving no bags left behind, because we believe that the spending power of the dollar is going to continue to go down in value. That's a fact based on inflation. Blockchain technology, distributed ledger technology, and cryptocurrencies are going up in interest. That's the truth. And together, you know where we're going, man. We're going camping on the beaches of the moon. So I'll see you on the next video. I'll see you on bullrunners.com. Go there right now. Click the button. Put in your best email address. It's free. And I promise not to send you a bunch of cat photos. I'll only send you the best information. Unless you want cat photos, then like this video, and I will spam your inbox with the latest and greatest cat photos. Even though I'm not a cat guy, right? I'm a dog guy. That's why I like Dogecoin, Shiba Inu, and other projects that we're going to share with you on bullrunners.com. You know what to do. Stay bullish.